Thank you for joining us. You're watching Making Money, the podcast, and I'm sure by now you already know the drill. You have to like and subscribe to enjoy all these conversations. My name is Priva, and I'm back with yet another exciting episode. Today we're talking about banking. How exactly do Ugandans access credit? And also, what does the future look like for them in terms of banking? So whether you are a borrower or even a small business owner or just interested in personal finance, this episode is for you. And joining me to help us unpack this conversation is Andrew Bill Kayejira. He's a branch manager of a leading bank here in Uganda. Thank you for joining us.
Thank you for having me.
What role do you play in banking?
It's a managerial role. At the branches.
So you oversee all the processes that happen in banks?
Everything.
You know where the money goes?
I know where it comes from. I know where it goes. I know how it's used.
Yeah.
I should know.
So did you come with some money? Because every time somebody comes from a bank, I think they have come with the money.
Yeah, I do have plastic though.
Oh, plastic.
Yes.
All right, we'll go with that. So let's dive into banking in general. What daily challenges do you see with the clients that you talk to on a daily basis?
Oh, that's a big one. Well, daily challenges. For starters, Ugandan banks speak English predominantly.
Yeah.
So one of the challenges that we have as a Ugandan banking community is that to unpack the products that we have in the local languages, in the local dialects, for the Montwawansi to understand, so to say, it's a bit difficult. You'll find, for example, there are people who work up country and they're still speaking the languages that those people don't understand.
Yeah.
Even downtown here, Uganda, Kampala, you'll find that the traders, most of them speak the local dialects.
Yes.
Problem is, when you get into the banking halls, the people you find probably are speaking English. And it's a bit confusing because to unpack the terms and conditions of banking of all products in a local language is very difficult. So that's one of the challenges. You find that you're explaining to somebody in English or you're trying to explain in a dialect that you probably hardly understand.
Yeah.
So it makes it very difficult for the other party to uptake. It's a normal thing. It's allowed for you to speak your local dialect as a customer, but then who are you speaking to? Are they able to understand you properly? Or you'll take a case in point. You're a semi-illiterate, and then you need to transact at the bank, at the counter.
Yeah.
Problem is you can't write the full amount in English. It's allowed for you to actually write it in your dialect.
Really? Your local language?
Yes.
Wow.
You are allowed to write the thing that you understand because you need to remember what you wrote. But then you'll find that these people will come to, say, for example, the manager.
Yes.
And say, kindly write for me in Luganda, if I don't know if I should speak that. You understand? Yet they wouldn't understand it if you wrote 10 million.
Yes.
So it's a bit of a problem we bank people who hardly speak the banking language.
They are not literate enough to understand.
Yeah, so it takes us back and forth to explain to them that, it's actually right for you to write million yoka or zoka or something like that. It's a challenge. That's one of them. The second one is that there's a lot of paperwork.
Yes.
There's a lot of paperwork, and that's a challenge to the customers. Of course, banking as it is as a sector, there's always protection. You have to protect yourself. You put so many terms and conditions, which are pre-approved, by the way, by BOU as a regulator.
Yes.
But then, seeing as it's a lot for the other party to read through and understand, it's a challenge. Because then at some point when there's a need for litigation or somebody has aggrieved the other, whether it's on the side of the bank, you'll find a term somewhere that protects the bank. You understand?
Yeah.
Which the other party did not
read or even fully comprehend.
And all they did was sign against it. Sign or put a thumbprint. So it's a bit of an issue as well.
Yeah.
Then another challenge is, I think, accessibility. Banks haven't been close enough to the communities that work. It's a challenge that is being sorted. But you'll find that on certain routes, say for example, there are people who need to bank the farming areas and all that, Mitiana, Mubende, what, and you find there's hardly any bank.
Yeah.
So accessibility becomes a problem. And that's why you see the telecos are taking up that space. They are covering up the gap.
Yeah, that comes
So it's
with
a bit
not
of a
having
challenge
banks
to the
physically.
bank because we can't be everywhere.
Yes.
And when we bring in solutions like e-banking or mobile banking, it's not well taken up.
Yeah, it faces also
You'll
some
see
sort
that
of resistance.
one of the challenges there is that one of the solutions to that challenge is agency banking. But see, an agent will not be in an area where there's no bank. They take too long to get certain services done. And it's a solution to that problem.
Yeah.
So, yeah,
Those are a
that's
couple
just
of
about
them.
it. Some of them.
All right, let's talk about loans. One thing I've noticed amongst Ugandans is that maybe 5 out of 10 have gotten a loan, either from a bank or even the mobile banking, services you've also talked about. What type of loans do Ugandans always go for?
Well, a couple. They take quite a number. Among them, for the formal sector,
Yes,
is the personal salary loan. Now that, of course, when you have an employment, you have probably a contract or a permanent staff, then you can actually uptake that facility. It's normally they range. Lately, I think some of the banks give up to 84 months for you to be able to.
like a repayment plan.
Yes, a repayment debt. Like,
Period.
so for example, period for, you take one today and then you have to pay it back in every month, but for 84 months. I think they go for as low as 6 months. Yeah, 6 months to as high as 84 months for most of the guys who work formal jobs that are permanent. But then there are those who have contracts, and then those ones you lend within their contract period.
Yeah.
Different banks have different models. Some actually give an extension of a period. For example, if you have a 2-year contract, they'll give you 2 years plus, say, 6 months out of contract.
Yes.
Something that actually affected so many banks in COVID because there are so many people who went off and they couldn't be, they were laid off.
Yeah, they couldn't remit
They
the
stayed
money.
within their contract period and then were not extended. So then banks kind of suffered a bit. But of course, they were protected.
You talked about
That's just one salary loan.
Yes.
Yeah. Then, of course, on the side of business, there are quite a number. I would spend the whole day here.
talking about business loans.
Yeah.
You talked about the way how different banks operate differently. How does Uganda's central bank ensure that all banks follow the fair lending practices? And also when it comes to the issue of interest, do you guys have like a uniform interest on the way people pay back, especially on loans? Or is it different as we check out bank by bank?
Oh, well, that's a good one. You see, the central bank being a regulator, it
Yes.
protects both ends. It protects the consumer, who is the client in this case, but also has got to protect the bank. So it has what they call consumer protection guidelines, which are printed in, they do a good job because they actually translate these into the regional dialects. Say if you're in Busoga, you're in the West, Runyakitara, Ruganda, or the northern languages and stuff like that. It's, they do this because within those consumer protection guidelines, which every commercial bank has got to follow, you're supposed to be thinking about your client. The regulator is thinking about the customer here.
Yeah.
So when you break these, there's a hefty fine for the commercial bank. So in that, you'll notice that there's a lot that goes with how the bank should serve the customer.
Yes.
And then when it comes to the thing of interest, it's been a challenge because the central bank only goes with what they call a central bank rate.
Yes.
Now, for example, it would probably put it at 9.75 as it is, maintains it there for economic reasons. And banks, different commercial banks may follow that line.
Yeah.
That you cannot lend below the central bank rate. However, the central bank does not come to you and say, please don't lend at 30. No, don't lend at 12. You cannot lend below its central bank rate. But what you can do, you can lend as high as probably
you
your
want.
policy states.
Wow.
Now, that's a bit of an issue because I think because it's a regularized economy, we cannot I cannot speak so much for it. I don't know why they don't regulate interests here. But every bank, every commercial bank has its way. And according to its plan, according to its pricing policies. But one thing that determines interest rates in banks, in commercial banks is, for example, how much interest do they want? How much money are they looking to get from the lending arm?
Yes.
But also, we lend what we have. Now, when I say we lend what we have, we lend the deposits that we have. So how did we get those deposits?
Let that money, yeah.
Yeah. So if we got the deposits expensively, chances are we're going to lend expensively to cover up. Now, when I say expensively, what I mean is, for example, you have fixed deposits that you gave at a high rate, say like 15%.
Yes.
And you've gotten quite an amount of deposits, but you need to lend to be able to cover up. You are not going to lend below 15 because you're making losses.
Yeah.
So if you got those deposits, what we call sticky, cheap deposits, say these deposits are from people's savings and they're cheap, then you put your lending rates low to be able to lend.
Yeah.
Yeah.
As a Ugandan, I go to a bank and I want to get a loan. What criteria do you guys follow to say, you know what, it's okay, she qualifies, let's give her money?
Well, for starters, there's something we call KYC. It's an acronym that means know your client. But behind that acronym, there's a lot. There's KYC for lending.
Yeah.
You need to have a national ID, a valid national ID, of course. And then you need to be, depending on the product that you're taking, the paperwork that follows a salary loan, for example, is not the same that follows a business loan. For a salary loan, I'll stick to the easy one. You need to be employed. So you have employment documents. If you're on contract, you have a contract. You are appointed, right? Then you are confirmed, right? And then you have a pay slip that shows the money that comes onto your account. Is it all salary or is it salary plus allowances? Some people get lunch allowances. Some get housing, but it's all paid in one batch. So you can't lend somebody money when part of the salary is something that is a bit inconsistent. So we need to know the consistent figure that is actually salary. That's what we lend against. And the law in Uganda does not allow us to lend more than 50%
of what you...
When, for example, your salary is 1 million,
yes,
we cannot give you money beyond, we cannot take more than 50% of that salary. You have to survive.
As I'm paying back.
Yes.
Okay.
Yeah, but still, of course, there are certain ranges. And say, for example, somebody is earning above 10 million. Trust me, there are people in Uganda who do that.
Oh, very many. You guys are earning.
Those ones can afford to live on something like 40% of their salary. Or net salary, by the way, we don't consider gross.
Yeah.
So it's the money that hits the account. And then, of course, when it's to do with secured lending, because there's both unsecured and secured.
Secured, yeah.
Now, secured, you need to have collateral. Collateral, you need to have titled property. Keyword here is titled property.
In your names.
Yes. Your names. Could even be your husband's or your spouse, for that matter.
As long as it's valid.
It's valid and as long as they consent.
Yes.
So now, with that, we give extended periods. But still, the keyword here is titled property because the bank has got to register its interest on that title. So we don't... Some banks do agreements, but the ones that I have worked for don't. Yeah, it's a bit of a challenge because in Uganda, unfortunately, it's a bit of a trick when we're not that, our integrity is a bit lacking, no offense, but somebody will give you an agreement and give it to another bank and give it to another bank and give it to a money lender, something like that. So it's a bit of a challenge.
To avoid any issues.
It's difficult when it's an agreement. It's easier when it's a title.
Yeah.
Yeah, so you can mortgage it.
So we talked about the issue of the bank looking at how consistent your cash is. How many months are those? What are we talking about there? Before the bank can say, okay, you know what? She has been consistent, maybe for 4 months or 6 months. Now we can give her money.
For starters, when you're getting formal employment,
Yes.
you need to be confirmed. Now, it takes about 6 months, generally, to get confirmed.
You mean the probational
Yeah,
period?
the probational period.
Okay.
When you get appointed, there's an appointment, then you're appointed on probation until you prove your worth. It takes about 6 months.
Yeah.
So in that period, you're meant to have your salary coming into whichever bank that you choose, the bank that you intend to borrow from. So now some of the banks, different banks have different policies.
Yeah.
But you'll see mostly they'll take at least a minimum of 6 months salary drop. That is on condition that we are not having an agreement with your employer. Now you'll see that some banks have what they call MOUs, lending MOUs with the employer. And they sit and agree that we are here, of course, with the blue chip companies. I'll even mention some if I can. Say the likes of MTN, Airtel, blah, blah, blah. The big companies. And you find that banks strive to get to those companies to lend to their staff.
Yeah.
But they have to have lending agreements with the administrators. So in those lending agreements or MOUs,
Yes.
as long as this person is confirmed, all they need is a salary drop, 1 month.
That's all.
Yeah. You could be in that organization and your salary doesn't go to Bank A, but you want to borrow from Bank A because your employer has an MOU with Bank A.
Yeah.
So all you need is to transfer. Sometimes they even approve a loan before your salary drops, and then they wait for the salary to drop because they know that your employer is a legitimate employer. They're not about to fire you tomorrow. It's only the informal employers that have a bit of an issue. Let's just say the SMEs, that the small companies that have, that is a bit important because the difference between the blue chip companies and those companies, those SMEs, is big, because SMEs tomorrow they could easily either chop your salary or lay you off, like we saw in COVID. Some people were closed off totally, say you're not working, I'm not working, no salary. But then the blue chip companies left their people at home, said you can work from home, or you will still stay employed,
Yes.
even if you're not coming to work until this whole lockdown thing is done.
Is lifted.
Yeah, so it's a bit of, depending on where you work, the circumstances are different.
We've seen the growth of microfinance institutions in Uganda. Have they been helpful to Ugandans in one or another when it comes to giving out money?
Well, the microfinance companies, what we call MDIs, micro deposit taking institutions, first of all, they're a regulated entity by BOU as well. And yes, because they do mostly group lending.
Yes.
And farmer lending, agricultural loans, stuff like that, small loans, they have their advantages to the people of Uganda because most people of Uganda are micro.
In a sense,
The bigger chunk is micro. The apex is limited. It's a bit small. But down here, the groups are quite many.
Yeah.
And the MDIs have done a great job. Of course, because they're not as big, they're second tier. They have the limitation there is in mostly the interest rates. The interest rates are high. The cost of credit to them, like I told you earlier, the cost of credit is determined by how expensive your deposits are.
Yeah.
So your money is expensive to get, so you have to lend it expensively
Because you don't want to make any losses.
Yeah. So now that for the MDIs, they lend to a bigger chunk of groups, rural areas, small businesses, and they cover that gap, which banks may not be able to do, commercial banks. Of course, we're getting there, but it's a bit of a challenge because there's already a player there. You can't compete with them. Their paperwork is different. Their operations are different. Their methods of collection are different. Yeah.
You talked about the bit of collateral. How does it differ when you guys in the banks are agreeing on the collateral, especially given that some people will be in rural areas and others are going to be in urban areas?
Well,
can I bring my cow and say that's my collateral and just because I'm in a rural setting?
It depends. Now, there's a product for each setting. You'll see that some products thrive in an urban setting.
Yes.
And other products thrive in rural settings because we study the environment and then do a product or come up with a product that fits that environment. You'll see there are some areas that do not actually have land titles. and the land system and the land tenure system is communal.
Yes.
But somebody has been there and this is their chunk like this, and that's where they put their family, their farm, their plantations and all that stuff.
Basically, their livelihood is there.
They've grown up there, their children, they bury there.
Yes.
So it's not fair to say that we will want a title for that. But the product will determine, you understand? There are products they will not take because of the system that they're at.
Yes.
But there are products that are meant for that kind of system. Different banks have different ways. You'll find that some of the leading banks here actually thrive on taking, most of their money comes from that kind of setting.
Yeah.
And because those people know that, yes, much as I don't have a land title, the chairman will sign who will do this, stuff like that.
Yes. Okay, let's talk about the risks of taking loans. It can't all be roses.
Well, it's never all roses, like you said.
Yeah.
The risks are quite many and different sides. Banking side, we call them credit risks. On the side of the customer, you're risking your life because you cannot take something that you will not pay. But you see, the community, the economy where we are at is hard to determine.
Yeah.
You will take a facility today, anticipating that it will make you money. And then tomorrow, you'll find that, oh my God, it's wrong. And you don't have the money, you've already invested it. Some people take facilities and get into, when I say facilities, I mean loans.
Yes, I mean those huge ones,
Yes.
especially for like
And
big projects.
somebody will take a loan to buy a chunk of land. And that chunk of land is not going to get them money. Then as soon as they take it, 3 months down the road, they lose a job. And then they can't sell. But that's just one of those.
Yeah.
The risks are quite many. On the side of the banks, of course, there's always going to be forgery in Uganda. People forge a lot. I don't even know why we have that street that has those professionals.
You mean Nasa Road?
I don't know, but I know it's a street there that does quite a number of things.
Surgeries, yeah.
Yeah, and some of these things look legit. So at times when they produce forged documents, it's a risk on our side. Forgery is a big, big, big risk. Number two, there is connivance. You'll see that the situation I mentioned earlier,
Yes.
where you lend somebody against an agreement, and there's connivance. They connived with the chairman to make two agreements of the same what? So they give you one agreement, and then the next lender will also take the other one.
Oh, Jesus.
So you're all lending against the same chunk. Yeah. Three, on the side of the customer, people take loans to cover domestic expenses. You take a loan to pay a rent. You take a loan to pay school fees. You take a loan, a non-productive loan. A non-productive loan is extremely hard to pay.
To pay back, yeah.
Yeah, because if you took a loan to inject in a business that is going to bring you back the money that you are taking, that's okay. But you take a loan to spend. You talked about earlier mobile loans.
Yes.
People take mobile loans in areas in bars. He wants to pay his bill. He doesn't have money. He goes onto the phone and takes a loan. That's an expense. By the time you pay that expense, you've gone low.
Yeah.
So it depends. The purpose for which people take loans in Uganda is a big problem.
Yeah, and it differs from
There are
person
those
to
who
person.
take loans to do developmental work, to push themselves from point A to point B, to develop themselves, to take certain assets, because a loan is actually a forced saving. Yeah, when you're formally employed, you need to take a facility as a forced saving,
Yeah.
because then you pay over a long period of time. Things that you would have gotten in the future, you can get now because time value for money and stuff like that.
Yeah.
But then there are those who actually take for the wrong reasons. I am broke, I don't have rent, so I go and take a loan.
And there we have our Ugandans.
Yeah.
Now, on the issue of saving, I feel like the saving culture in Uganda is in shambles. People don't know how to save. People don't really save. How best can they save? Speaking from a banking perspective.
Yeah, well, that's a whole syllabus. But still, I'll break it down a bit.
Yeah. Yeah.
It's easier to save as a group. Group savings are much easier. For example, different banks have different names for those group savings. You'll find in some banks they are called investment club savings.
Yes.
Others do SACCOs. But you as an individual to save money on your own in Uganda is extremely difficult. It all lies in the power of synergies. Like 1 + 1 is never 2. Sometimes it's 3, can be even 4. You understand? So if you have somebody, a birthday that is going to help you to save, that's the thing. That's the way to save. Saving alone is very difficult. However, banks have come up with different saving products.
True.
Where they give you some interest on them. Fixed deposits, in some cases are called smart plans. Then you have insurance policies from the bank assurance side, because banks now have a department called bank assurance.
Yes.
And it helps people to save money, to put something aside for themselves. It's a challenge because it's not supposed to be seen as an easy thing, because easy things are easy to break. You understand? So in banking or in this country of ours, saving as an individual is very difficult. You need to save as a group, be part of an investment club, be part of an association. We all came out of schools. You have all students associations. You can save as that. You can save as a circle.
Even
you can
work.
save. Yeah, when you're trying to save as an individual, it's going to be very, very difficult because you don't have somebody to push you. You can save between you and your wife, or you and your husband in this case.
Yeah.
Yeah.
But
or a family.
Speaking about families, what advice would you give to a young family, especially when it comes to expenditure and, money, joining money and spending it together and navigating all that?
Well, young families.
Yes.
For starters, you need to understand that you're young. And you stop comparing yourself to
the next person
that lives next to you. They probably have been there longer. They probably were born with a silver spoon in their mouth.
Or are doing illegal things to earn money.
That as well. Yeah, in Uganda, it's very easy to earn money different ways.
Yeah.
Yeah, different strokes. But yeah, everybody earns something. So when you're a young family, you need to go slow. Just like a child. They're not born running. They're born you can just put them there. Even sitting is a problem for a child who has just been born.
Yeah.
So if it's much of a problem to the child to even crawl to the next 2 steps, why do you want to go all in? Now I'm married. We're going to start saving. We're saving 1 million per month. Start slowly.
Baby steps.
Watch the environment. Some challenges come in when you're married that you did not have before you are married. The expenses are different.
Yes.
But also teamwork. Teamwork is key.
Yeah.
Teamwork is key when you're a couple, a young one at that. Before the major problems come in, you need to say, okay, fine. What can we save per month? That question has got to be written.
And what is actually manageable?
So you say, from my side, I'm able to do this. From your side, what are you able to do? While we live, while we grow a family, while we get into learning how to live together.
Okay, from families to businesses now, what advice would you give to somebody that is trying to start a business here in Uganda? And probably wants to maybe start with like a loan. They don't have enough money. What should they keep in mind?
Well, do your research. Don't just bump into it because you heard.
Yeah.
Because you had Paul is doing a poultry business. Therefore, I also want to do poultry. And I see him shining. You don't know the problems he has been through to get to where he is. So-and-so is doing a bricklaying. You don't know. Do your research. Don't just fall into a business that is glossy. It's the one that is thriving. It's the one that is moving. So let me just go for it. No. Before you go to the bank to borrow money, first of all, the bank can never lend you money on a startup.
Yeah.
You understand?
Yeah.
The businesses that banks lend to are continuing businesses. So you'll say in some banks, they'll probably tell you this is a business growth loan, not a startup, because we need to see that it's been present for about 2 years. So if you're able to survive 2 years, you're able to borrow against that business, for that business, to inject life, probably. And also while you're doing this business, you're doing a startup, the chances of borrowing in any institution are very difficult.
Yeah.
Yeah, that's when the MDIs come in and they're probably able to lend you against your startup and stuff like that.
Would it be a fair statement if I said that the way loans are being approved here in Uganda has now gotten easier? And also, keeping that in mind, do you think, where do you see the future of borrowing in Uganda? Where is it going? Are we going to keep borrowing and borrowing and borrowing? Are we going to finally have some financial discipline and do things differently?
First of all, taking credit is a good thing.
Yeah.
It's not a bad thing to borrow. The question is, what are you borrowing for? Yeah. What are you borrowing for is if you answer that question, then you can actually go ahead and borrow.
Yeah.
And yes, the future of borrowing, but banks have evolved. Banking has evolved. We've gone tech, we've gone e. What used to happen back in the days that somebody would come into the bank, fill in a batch of forms for 2 million.
Yeah.
You understand? For 5 million. Right now, all you need is your phone and you get into the bank. You'll see that there's a pre-approved facility that you can take. You go in there, you check, how much do I qualify for?
Yeah.
How much can I take? How much do I need to take? Not everything you qualify for is for the taking.
It works, yeah.
You'll find that you qualify for 5 million. But do you need 5 million? Keyword, depending. Are you a Mudala person? If you take 5 million and you're going to spend 3 million in restocking and the other 2, you go and happen.
Just vibes.
Yes.
All right. Andrew, as we wrap up the conversation, what are your final thoughts on banking in Uganda in general?
Well, thank you very much. Now, banking is something that's not going to go away.
Yes.
The only problem we have is that we have a community that doesn't trust banking. They think they have so many theories about banking that need to be demystified. Somebody, for example, I'll give you this. Somebody thinks that when I die, my money will be taken by the bank. Or banks are asking me this question because they're suspicious of me. We have laws. You need to understand banking is a regulated industry. Very, very, very regulated. Now, because we are regulated, we follow certain parameters.
Yes.
We cannot just come out and do. You get into the bank, they ask you for your ID because you're drawing a certain amount. And you think, but you guys know me. This is my account, blah, blah, blah. But there's a regulation that we are following. You get today. But the guys you find in the bank are not the bank owners. They're just employees. We serve.
They're there to do the job.
Yeah, we serve. And then also, maybe last bit of, people need to understand that banking is a job that is done just like you come from your office, you're doing a job, because we have a situation where somebody comes into the bank and their expectations are that I will walk in and out because I'm just going to do a small errand at the bank, but you're going to find somebody who is also doing their job. So they might delay you a bit because they're doing their job. It's only easy if the person coming into the bank is knowledgeable enough to understand that just like where I was, I have things I follow. Even here, they're following things. They're following certain rules and regulations.
Thank you so much for making time today, Andrew.
Thank you for having me.
Hopefully we get to have another sit down sometime down the road. All right, I've been talking to Andrew Bill Kadiajira. He's a branch manager of one of the leading banks here in Uganda. And we've been talking about banking practices here in Uganda. So whether you're looking to borrow or just maybe you want to understand the financial landscape better, like he said, staying informed is going to be very, very key. All right, my name is Priva. We'll catch you with another episode on Making Money, the podcast. Until then, stay financially savvy.